and welcome to The Trade. Before we get to the charts, let's have a look at what traders are watching. US President Trump's administration saying it's agreed to hold more talks with Russia on ending the war in Ukraine after an initial meeting that excluded Kiev, a departure from Washington's previous approach that rallied US allies to isolate President Putin. The US dollar strengthened against major currencies, led by gains against the euro, driven by safe haven bids. The Aussie holding near two-month highs, though, after the RBA cut interest rates and signalled a more caution, against further rate reductions. Gold prices rising over 1% on concerns about economic growth. Oil prices settling higher as supply disruptions mount in Russia and the US as we continue to see those talks about ending the war, and raw sugar futures on ice rising to a two-month high, the prospect of substantial exports from India fading, while Arabica coffee falling further from a recent record peak. Let's take a look at the technicals with Tony Sycamore from IG, who joins me now. Finally getting a rate cut, Tony. The Australian market, though, having a pullback.
It is indeed. The twin pillars of the ASX 200, the big mining stocks and the big banks, absolutely shaking today. And that's really followed a very impressive push from the ASX 200. It held the bottom of the trend channel in mid-December and pushed up to a new high. We saw some bearish divergence up there. You can see the RSI wasn't pushing up to the new high to confirm that 86.15 high, and we also saw a loss of momentum type candle. And in this morning's notes, we said we thought we'd probably due for a pullback down towards 83.50 to 83.70ish, which is that uptrend support and also horizontal support. I didn't think it would play out quite as quickly as it has done, but certainly it does look like we do have that pullback underway now. Need to see that 83.50 to 83.70 level hold, otherwise there is a risk that we see a deeper decline. But at the moment, we're holding within a broader trend channel. This is a pullback which I think we probably needed and was overdue, and now we need to see how it acts when it gets down towards that 83.50 to 83.70 support.
Big falls in the banks today as well. I mean, they all were very quick to pass on the rate cut, and NAB, of course, out with its earnings. When we look at the impact, though, on the Aussie from the RBA cut, I guess the fact that their outlook is a little bit more dovish sent the dollar higher.
Yeah, well, I think the rate cut was probably widely expected and priced in there, so there wasn't a whole lot of move in the Aussie dollar, and the fact that they remained a little bit cautious in terms of the outlook, not surprising that it's really just meant the Aussie is hovering. I look now at what comes ahead. There is some important data before the April board meeting, but I think the more important data will be that March quarter inflation data, which means that for me, if they are going to cut again, it's not going to be until May. So at this point of time, we've got a little bit of support for the Aussie dollar here, but it is chopping into a very important area of resistance here. We've spoken about this previously, 63.50 to 63.70. While it remains below there, there's a risk we see a retest of that low we saw about 3 or 4 weeks ago. But if we can get up above 63.50 to 63.70, at the moment it's been strangely quiet, almost eerily quiet this morning, Jules, in the Aussie dollar. But if we can get above that 63.70 area, then potentially we can trade up towards that 200-day moving average, coming in around 65.60ish.
All right, let's move on to gold. We're continuing to monitor when it might hit this 3,000. I know Goldman Sachs increased their target to 3,100. A lot of reasons here, but what are you seeing in terms of the trend?
Well, it really feels like a matter of time. We had a 29.40 double high come into play over the past 3 or 4 sessions. It hasn't really been able to manifest into a deeper pullback, and once again we're back testing this 29.40 to 29.42 resistance area. I think if it can break above there, then it's really the green light for it to trade up towards the top of that trend channel coming in around 3,000. So at this point of time, it's not far away from there. I suspect it does break through there, and probably then we can look towards Goldman's target up around 3,100.
Now, the Nasdaq's still above 20,000. I think a week ago when we were talking, we were saying how Meta had been on this absolute huge tear. It has fallen back now. It's also fallen back with the likes of Amazon and Alphabet, but still a pretty good resistance level for the Nasdaq.
That's right. I mean, 20 days unbroken day of rises is pretty good for Meta there, but look, it was inevitable that we had a pullback, and that played out last night, but not for the Nasdaq. The Nasdaq's made a marginal new high. It hasn't been convincing for me. It's still chopping into this resistance in this 22,000 to 22,200 area. If it can push above there and start to get, I guess, a firm toehold above that resistance area, then I think it's the green light for a move towards 23,000. But at the moment, the jury's still out for me. There's still potentially a range in play here for the Nasdaq. But look, over the next 2 or 3 sessions, I expect that to be resolved either with that clean break higher we're looking for, or potentially another turn lower within that range it's been trading for the past 9 weeks.
And Bitcoin falling below some pretty key levels. What's next?
It's just been absolutely, the volatility just seeped out of the crypto market, particularly Bitcoin. They're just trading, almost trawling along the top of this uptrend from the October low there, but it wasn't able to bounce away, and that probably was a warning sign in itself. Now it's pushed below there this morning before trading back towards this trend line around 95,000. So it is a hugely important area, but the more important area remains this 91,000 to 89,000 area. And providing it can hold above here, this is the medium-term support for me. Providing it can hold above there, then look, we can start to say, look, this correction in Bitcoin is still a correction, not an impulsive type sell-off. But if it were to break below 89,000, then potentially we're looking for a good old-fashioned crypto clean out. But still a little bit of work to go to the downside before that plays out.
Yeah, what happened to, 150, 200,000?
Well, I think people have got a little bit fatigued, and I think, as we were chatting about last week, some of those tailwinds have now turned into headwinds as well. So it's, I don't know, I just don't know where that next bullish catalyst comes for Bitcoin. And it's something which I think means that there's less buying coming into the market. I think we're all a little bit bored of the micro strategy or the strategy buying, which has been permeating through the market for quite some time. So we're looking for something fresh now, and I don't see what that catalyst is going to be at this point.
All right, Tony, always a pleasure. Thank you so much. Tony Sycamore from IG. That does it for this edition of The Trade. Be sure to join us next time.